we got this, structural low here. Would this not be a good trade? Does that not make sense to take? Look, sweep of liquidity, which was the channel or the trend line. Break of structure, potentially again. Yeah? And doesn't it make sense to take a trade here? And then we aim for, Asia high to take out this channel. Does that not make sense? The thing is, it doesn't. And the reason why it doesn't is because, yes, gang, hope you're doing well. So welcome to trade of the week. So what we have here is Euro USD. So I'm going to go straight into it. And you can see here on the 1 hour time frame that Euro USD is heavily bearish, where we've been going bearish for days now since the end of September, right into the middle of October. All right. So you can see typically what we're bearish. That's the 1 hour time frame. And go straight down to the 5 minutes. So now let's look at what we're looking at on the day. So on the day, what we had was we had build-ups such as this channel build-up here. Okay, then we had equal lows created here. So previous day low, create equal lows alongside Asia low. So Asia low and previous day low, create equal lows. So we had that as liquidity to take, right? But then the previous day, what else do we have? So on the previous day, what we also had was, you see here on the left hand side, this nice inducement high, which took this here. Then we had these, multiple. So we had highs here, relatively equal highs. This high here, which was, if you see this high here, which I'm just covering over now, that's like a relatively equal high. And then this high just about took it, as you can see, right? So I'm gonna mark that up as also equal highs. So you can say here that this point here could be a potential inducement high, potentially liquidity to take, or even potentially mitigate. It depends on how price builds up into it. Because something like this, I wouldn't want to set a limit here to take a trade off that, because you could expect that to be a potential medium inducement to be taken on that day. But also, you got structural lows below it, which may be enough liquidity to take for price to then mitigate this at the end of a cycle to then reverse. All right, so that's how we'll be looking at it. But if we're looking at this now, where we start the day. So we start the day. This is about approaching Frankfurt Open. Okay, so you have as well. You got. This is what I like to do because it makes it much easier for me as I mark up the channels. Even in here again, you can see here. Thing is, if you do this too much, your chart can become messy because this is, if you do it too much. So I don't do it all the time, but I can eyeball it nowadays a lot of the time with the different liquidity and things like that. And you could say this is kind of irrelevant because you've got the equal lows here, and you've got the inducement high of these channels that has really taken place. Okay, but what we do have here is you've got Asia high here, you've got the equal lows. So let's see what happens if I start to press play. Cool. First things first. Aggressively look. Frankfurt Open price comes down, takes out the equal lows. Right now, let's go on to the 1 minute. Because now we're like, okay, is there a trade in here for us to take straight away during Frankfurt? What do we have first? Let's look at this on the M1 context. We have a bearish channel. Right? Bearish channel. Fake break of structure slightly here. Right, and then you can see here again this is a channel as well. You see this? It's actually a channel. But again, I'm not going to mark all of this out because it can get crazy. Back on the 5 minute for a second. So you can see here, little inducement of the high and then aggressive move down. Let's play. Price moves lower. And then look, lower again. One more push down. So first of all, it takes out the equal lows. One more push down on the 5 minute. And then, okay, now we start to get a response. Back on the M1 now. So you can see here again, what do we have? You say it's compression, or but I like to call it a channel. So you got a channel here. Then you also got a trend line. Looking price action there, and then we can see what happens here. If we play on, we're now approaching London Open. So you look at this now, you think, is this an entry? You've got bearish channel, vector low here, but then you see it slows down here, doesn't it? It's not aggressive, but then again, this response is aggressive. So could you say that this is a relevant break of structure? Could you say that? Let's see what happens. Sorry, let me remove that so it's easy to see. Oof, look at that. Taken out. When we look at the timing it happens, London Open. So, what do we have here now? What we have here is actually a smart money trap. Right? Why is it a smart money trap? Why was this not valid? And the one thing I would say when I'm looking at trades like this, okay, is that if you're looking at this price action here, is this price action here? Is this price action here an aggressive move lower, or is it slow in comparison to this push up? This bullish reversal, is this aggressive, or is it more? Are these vector candles? Maybe you got one vector candle here, but then this is slow, right? And you got the break of structure here, which is actually just a fake break of structure. That's all that. A fake break of structure, creating the smart money trap just before a key timing window. And that key timing window is London Open. And this is why sometimes if you're trading Frankfurt, it's easy to get caught out thinking that the price is going to move after the Frankfurt inducement, but London Open is the better timing. So let's play on. Okay, now London's open. Okay, cool. So look at what do we see here? So now we see semi-equal lows created here at the smart money trap. Right, equal lows. Look at the difference here. This is slow. It's like a channel type build up and then an aggressive move up. And look at this here. One candle, boom. One candle takes out the SMT and the channel, boom. Then get the one more push down with a wick, and then we get the aggressive move up. And then the mitigation here. The question is, does this hold though? That's the question. Does this hold and does it make sense? Well, the timing's great. It's London Open. Perfect timing. London Open, New York trap, key time windows, right? London Open 8 a.m., New York Open 1 p.m., New York trap 2 p.m. This is, and also London close 3 p.m. Right? These are key timings. It's all UK time. So let's see what happens there. So you've got the inducement low, taking out the equal lows, aggressive move higher. You've got the bullish move here, one candle bullish, two candle bullish, very aggressive move away, and then a mitigation of the candle of the imbalance here. Let's see what happens next. Oh, nice move higher, right? Aggressive move higher. Right, so you could say, is this a trade? And listen, there's no relative break of structure here. So that trade is going to be an aggressive one. All right, but I won't mark it up yet. I want to play out to see. Yeah, I want to play on to show you guys what happens here. Yeah, so let's play on. Still London Open. Okay, cool. Look at this now. Right. So we're looking at this. I want to show you the 1 minute and the 5 minute. All right. So look back on the 5 minute. Look at the bigger picture here. What are we seeing? So we are seeing here. We've got. I'm gonna make this a bit smaller so you can see the channel that I was talking about. We are seeing, this fake break of structure here at the Asian midline. You've actually got a nice little trade into the inducement at 7 dead on Frankfurt mitigation here. If you know what you're doing, know what you're looking for. Straight into the inducement. This is the 5 minute vector into the equal lows, inducing lows. So giving us the medium inducement as well. So it's equal lows and the medium inducement. Medium inducement is just when price takes out or induces a high or a low, a structural high or a low from the previous day. All right. So you got that, and then you've got the 1 minute price action that we just went over at the moment. So then, we had the aggressive entry at the bottom when you know what you're doing, when you really know what you're doing, and then you've got the relevant, the actual correct relevant break of structure. All right. So if we mark that out, if I do a red line, that always means relevant break of structure. Okay. So back onto the 1 minute. Before we do that, actually, let me show you something. So the inducement low right? Where price took out the equal lows on M1 is here, the 5-minute inducement low. As you can see here, this is yet to be mitigated, right? You see this low here does not mitigate that 5-minute candle. Very important. Back on the 1 minute. So now let's look at this. What does price do? Price creates another build up. Okay. Another build up. Induces the channel to the low side. And then it reverses, takes out the high of the channel. But also, when I saw this, I was looking at this, I was like, okay, this is actually a nice, relatively equal high, as you can see here. By these candles, look, you got the bullish, the vector candle, moving up, taking out the high. Then you got the engulfing response with imbalance, responding, right? So the question now is, look, there's no imbalance on the M1, but on the M5, we do have a M5 candle, which is the inducement low, yet to be mitigated. But we got this, structural low here. Would this not be a good trade? Does that not make sense to take? Look, sweep of liquidity, which was the channel or the trend line. Break of structure, potentially again. Yeah? And doesn't it make sense to take a trade here? And then we aim for, Asia high to take out this channel. Does that not make sense? The thing is, it doesn't. And the reason why it doesn't is because, okay, I say it doesn't, but if you want to take the trade, you'd have to put your stop loss below this low. And then it becomes a 4R trade. Still not a bad risk to reward, if you ask me. Let's not get too bougie about it. But if I'm looking at this in regards to the liquidity inducement strategy, I'm looking at this, I'm seeing this M5 inducement low candle that I want to be mitigated, and I'm seeing a structural low just above it. I just see this as liquidity to take into the entry. So really and truly, I'm looking at this, and this is actually, if you remember from the gold trade video, if you look at the video in the market overviews videos, when I'm talking about where gold, this same week actually, or the week before, how gold was about to be the lows of gold were about to get swept because the multiple lows that were building up, and price used CPI to take out the lows. It's a very similar thing with regards to the smart money trap. This was very similar price action. So you had the smart money trap here. So you had the build up, right? Trend line, equal highs, relatively equal highs, right? But first of all, you had inducement to the low side. Then we had a reversal. You see the aggressive response with the bullish candles, right? Then we had the high taken. Some people would see this as a break of structure. But what this actually is, it's a fake break of structure. And what it actually is this high being induced. And this is actually, if it was to come back up, you can potentially even take this trade down into here, right? Because that's actually equal. The high has been induced to then take out the liquidity on the low side. So when I looked at this, I saw this as a liquidity to be taken, a structural inducement, liquidity to be taken into the mitigation of the 5-minute inducement low. All right, and then the target being Asia high would be the safe target. Then you could, if you wanted to, you can try aim up here, but again, whether it gets there or not is a different story. So Asia high is the safe target, and that's a good 6R trade. Definitely more than worth it, because price may not get all the way up here. The likelihood that it getting up here could be quite low, right? So let's see what happens now. Back on the 1 minute. So I see this is a smart money trap. See, remember I mentioned here this could be a valid trade. It's an inducement high. Inducement. Look, build up. Sorry. Build ups here. And this is when it gets really it shows you that you can really trade this on the really intricately on the lower time frames. But this is a build up, inducement. Doesn't quite mitigate anything, but then it responds, gives us the break, and then it mitigates here to then take this, right? But anyway, again, I'm just showing you the levels you can get to. I didn't take that trade, by the way. I'm just saying that what's possible. Okay, so let's see what happens. price taps into the POI. Is it a POI or is it just a smart money trap? It's a smart money trap. Boom. Even gives us a response. Moves higher. Order flow. Again, comes back down. Takes out the structural low. All right. Structural low taken out. Boom. And then we see the M5 inducement low is now mitigated. Taking out liquidity on the way. And if we press play, so what happens? Boom. In no time. So price 935 mitigated. Took around less than an hour to get your 6R. Let's see if did it go any higher. What's this now? Let me show you something here. Hopefully you guys can see it straight away. What do we see? What do we see? What do we see? You start to see this properly soon. Build up, channel. All right. Then we've got, it's not as clean, but you've got a build up here. Again, I said it's not as clean, but build up, inducement, the vectors. And you can say you can expect then this high to be taken. And then we can see here you got build up almost forming, right? That's what happens. It's coming on 5 minutes for a sec. Look at that. It's the same thing over and over again. Build up, inducement. Build up, inducement. And then price comes back up. And this is the thing, that's why you've got to have safe targets. Because from my memory, I don't think price went any higher than this. I think this was it. This was the inducement high for the day during New York. So if you try to aim for highs up here, or even highs up here, or even this, you would have missed out. And that's why having safe targets, such as this one, blatant liquidity with a channel build up, is always best. Anyway, build up, then we had this inducement high, and then we had order flow. See, this is a tricky one because you've got this as order flow. I would have probably energy, and then things because you do have this to take on the way. However, this occasion it doesn't do that. It actually just mitigates the decisional. The decisional is the POI, which the last push comes from to take the relevant low, right? So this is the extreme of the of the leg. This is the decisional. The extreme is the last point of the leg. The decisional is the point that actually took this low. So you see here, it just mitigates here. So to be safe, to make sure you're in the trade, you'd have to enter here, order flow entry. Stop loss above there would be super safe. This would be super aggressive, and this one would probably be about right, just above there, targeting the London low for 8-ish R. As you see here, price does not come up and take this internal high. It just moves away, and then there we go. All right, 6R, 8R, 2 banging trades. God bless, take care, and I'll catch you guys soon.